Many people are asking me at the moment if we're facing the same as what we were facing in 2007. Difficult to say because the markets are obviously different at the moment, but if you're looking at rents and yields, there's something you can say about it. Looking at yields are priced quite aggressively at the moment, and pricing of yields in a more mid-term, long-term view is very much dependent on the pricing of the bond rates. At the moment, we don't see bonds moving that quickly. Short-term interest rates are getting more negative. Bonds are more or less flat, 10-year bonds. So from that point of view, we feel that yields will not jump up very quickly as soon as interest rates start appearing. But eventually they will probably do so. So that is something that people will need filtering into their projections. On the rent side, things seem to be quite positive. Comparing it again back to 2007. In 2007 we saw many markets being over-rented. That is not the case in Europe at the moment. There are more or less three segments in Europe, three segments of markets. One is the UK and Ireland, where rental growth has been seen already. That will continue a bit further, but more development is coming in, and as a consequence the rental growth projections that we're seeing are getting a bit more flat towards the end of 17 and 18. If we're looking at most of continental Europe, many of that growth still needs to take place. The good thing is that there's not a lot of property development on the way at the moment. And that also applies to the Benelux. That's very reasonable, and therefore we are anticipating more real rental growth to come through. Central Europe traditionally has a lot of development on the way, and as a consequence the rental prospects for Central Europe remain muted.